Hello, this is Nissa from Nissa Kay Finance. I'll be taking you through a new Business Bob crash course on projections workbook for service businesses. In this first slide, we've got the worksheet year 1 tab, and across the top you see the business name. You fill in that information later on, as well as the months across here. It's filled here because I've already filled it in later. I'll show you where to do that. So when you first see it, it's going to have zeros. Over here on the left-hand side, we have services, and you can customize everything that's in blue and everything that's in the light pink color. You can type whatever you need to for your business in there. So this is a service business, this is a cleaning business as an example, and we've input the quantity of those services that we think we're going to sell on a monthly basis. So in July there's cleaning of 4 small areas, 1 large area, 1 picking up. So those can be different clients. It's just there's different quantities per the type of service for each month. Across the top then you have these things you can change, because what you're charging per service, per item, per whatever you're counting here, you can have that. And so this is a $150 service for this specific service of small cleaning, and for large cleaning it's more, and this is where we take that into account. So the unit cost is a field that's calculated for you. The other labor costs you can indicate if there's any costs associated with the service. Other expense per unit, so that's where I've input a small $5 per cleaning supply charge, essentially, is what this is. The total cost and total income are calculation fields that will automatically calculate for you, so you can not worry about that part. Let's go on to the next. So we scroll down on that first tab and we see that we have over on the left hand side there's overhead section, and this is where you can input how much per month you need to pay for rent or your mortgage for your home-based business. If you have any utilities costs, your phone costs per month, how much money you need to take out of the business on a monthly basis to live. So here we've indicated it's $1,200 for a cleaning business for this person to live on. They don't have any monthly payments or other monthly costs. Supplies cost for this business is $100 a month, and there's marketing of $150. The professional services, legal, accounting, other, that type of a thing, this is a yearly cost that I've input as a monthly calculation. And I have an example down there below, which isn't the amount that's in there currently, which is the equal sign 1,000 divided by 12 will get you a monthly cost. So whatever your yearly costs for legal and accounting would be, this is where you would put it in and then make it a monthly number. And the debt service portion is the information. You put that in under the payment plan tab at the very end, and then it flows backwards into this field, and we'll talk more about that later. So on the right hand side you see the starting year I've input as 2015 because that's the year that we're in, and month 1 is the month that I'm going to first start counting the business's finances, and that's going to be in July. So it's a 12-month rolling calendar from July through June of the following year, because businesses can start at any month in the year, and so I input my months according, and then it flows to the previous tab across the top like I indicated before, and elsewhere as to what kind of months it goes. So then we have a 3-year rolling projection this way. So once we scroll down, we get to this section, which is the startup costs. And under here, these are for items that you would pay prior to actually technically starting your business in the first full business month of costs. So these are sunk costs in these categories. So for people, we're talking about salaries paid prior to opening for independent contractors, any regular salaries to other individuals, subcontractors, etc. Legal and accounting, this is for setup, filing costs, software, bookkeeping, legal questions, patents for intellectual property, anything like that to set you up. Equipment, we're talking about fixed asset equipment purchased before you open, not in the first month. So anything for your actual business, like a car would be, I would think, the biggest thing at this point, or a computer, before you actually have that first month. And this would be non-office supply related expenses. Insurance, we're talking payments that are needed to be in place before you actually open the business. A lot of insurances want it before your first day. So marketing, we're talking about development of a website, branding, logo, PR, etc. Space costs, if you have large damage deposit or a couple months of rent that they want up front, purchasing of a building or land, this goes in here. It's not your first month's rent itself. Inventory, we're talking about products that need to be purchased prior to opening. So for a service-related business, we're talking about, in this case of a cleaning business, we're talking about products that you would need prior to actually just doing your business in that first month. And you count that as inventory. And then any other expenses that are significant in nature prior to opening, certifications, training, anything along those sorts. So once you add it up, it gives you a total at the bottom. This total then translates into the overall rolled up reports tab, which you will see later in a little bit. So let's move on. In this next tab, worksheet year 2, we again have the business name across the top. The biggest area to take a look at is the percent increase where the arrow is pointing to. This is how much you want to increase the cost, or the amount that you're charging for your services. So in this second year, we're going to increase by 2%, and then the spreadsheet calculates that for you, taking your previous charges and just increasing by that 2%, and it auto calculates it for you. But we have on the left hand side, we have the same services as the prior year. The July of the first month of year 2 is the same count as the end of the previous year, and then we have slight increases with some fluctuation around the Christmas time period again for this business, and then it goes back down with then some slight building. We again have some cleaning costs under other expense per unit, the supply cost, but everything else is the same in how this whole slide functions. Down, we again get to overhead, because overhead can change from year to year, and I encourage you to reevaluate your thinking as far as overhead from year to year goes. Include some moderate increase in costs for, in this case it would be your phone costs have gone up moderately, and we've indicated that the wages are actually going up here as well to $1,500. Supplies, marketing, etc., all of that kind of flows through. Now, if you're wondering how this looks from one year to the next, when we get to the reports tab, you're going to see all of that. So don't worry about that just yet. So let's get down to the third tab, which is year 3. Because you're just taking a stab at this first pass through. So this is year 3. You have again the percent increase. So the first increase we had is a 2%, and now we're upping it to 5% in this particular year. So again, I have the same services. Again, the first month of the third year is continuing off of the prior year's closing numbers. And again, we have some fluctuation around the holiday time period. But really, if you look at the numbers, what we're indicating here is that it's a stable year. It's not a growth year. And the labor costs, everything else is the same here. So let's see what these numbers actually do overall. Oh, first we have to do the overhead again, sorry. So you go through your overhead, and we've indicated that in year 3, again, we want an increase in our personal wages that we're going to take home. So let's take a look. Okay, so here's the reports tab. This is the juicy part of it. So here is where you would input your business name and your name as prepared by. And this is the part where it flows backwards to all those other previous tabs. So in year 1, let's take and look at this projected budget for year 1. And so it starts in July, and if you read down, you can see here we have sales of $900, expenses related to sales is $25, our gross margin is $875 for a 97% gross margin, which is really good. And then overhead costs, if you'll see, the salary figure here is nothing, and I've done that on purpose. In this tab under the reports page, you can actually modify all of the overhead costs on a monthly basis. What has happened is that all of these fields, this first month is keyed into what information you put in for year one as a baseline, and then each month after that is taking from the prior month. So in this month, the first month I'm not going to take any salary, so I just delete out that information. Well, what that does is it takes and makes all of these zeros. So I have to manually go in and change this number to 1,000. So I'm just going to step up the salary to begin with. So I have 1,000 in month 2 and 3, and in month 4 I'm going to go up to $1,200 and then maintain. And once I put $1,200 here, it flows for the rest of the year, and there's no other changes here. But if I had known, as you can see under overhead, everything else has flowed through from the information that I input in the prior tabs. But if I wanted to adjust something, like let's say I know that we're going to get a space halfway through the year and rent is going to suddenly increase, I can put that information in here. So this is where I adjust any monthly costs if there's any fluctuations here. And this is where I can also tell how the business is doing overall. So going down, we have total overhead, projected net profit and loss. This is where the startup costs are. It's a sunk cost in month 1 is where it's counted. So the cumulative projected profit and loss for the first month is negative $1,041.67. And then it rolls from month to month. So you can tell when we get to positive cash flow is in month 6. And that's the exciting point, because that's the point where you are now profitable. So you have now turned a profit at this point in month 6. And then going forward, we can see that it's making money, the businesses. And for year end, we end with a positive $4,400 for year end, and that is taking a salary out. So that's doing decently well. Let's take a look at year 2. So year 2, you can see it goes up to 2016 as a rolling year, and we have adjusted everything down. It's $1,500 is what we're taking out for salary, and we're positive. Our cumulative numbers are positive all the way around, so that's great. And we end with $14,000 net profit for the year, and that's taking out $1,500 per month in salary. So the business is doing good because it can actually afford to maintain itself. And this is assuming that I have all my numbers as an accurate, guesstimate at this point. So for year 3, let's take a look. So year 3, again, we have sales as stable. We've upped our salary outlay to $2,000 a month, and the end of the year is $15,000 net profit. And so the business overall is profitable. But this is where on the reports page that you can take a look at what your guesses in the previous tabs have done and how the numbers flow, and you can see where they are working, where they're not working, and you can go back and adjust them in the prior tabs and play with those numbers and see what's going to happen. This can inform your decisions on how you're going to spend money, how you're going to try to make money, which items of service are actually going to get you a better return on your money, on your efforts, and all of that kind of thing. So this is the meat of the tab, of everything that you've put into it and getting all of that information out of it. So let's take a look at our final tab, is the payment plan tab. This is empty right now. How to use it is, it's just a standard agreement. If you wanted to use it, it says the company. So ABC Service Company has borrowed X dollars from you as an individual. So that would be Nissa in my name, and they're for the purpose of setting up the previously mentioned business. So this can be $100, it can be $1,000, $2,000, however much you as an individual have lent the business to get it started up, to recoup it. And so then it goes repayment terms, month 1 through 12. It's a 1-year repayment plan. You put the dates in as to when the business is supposed to pay you back and the amounts per month. And then you print it, sign it, date it, stick it in your binder for your business. And that can show why you can take out the first X dollars of money and give it back to yourself without having to worry about the tax part of it for these particular dollars only. Now, obviously consult your accountant and tax professional, because I'm not giving you legal advice and tax advice here, so definitely talk to them about the best way that's best for you and your business at tax time and doing this. But we've just included this as kind of a service tab if this is something you needed and wanted to include, and we have included that in the whole spreadsheet for you. So that is the end of the crash course with me. I hope that you've learned a lot, and if you have any questions, please let me or Bob know. Thanks so much.